Welcome to Advanced Course Part 7, Trends. Alright, if you're enjoying the content so far and haven't subscribed, go ahead and do so. If you want to support what I do and donate, you can find those details in the video description. And if you haven't checked out the Twitter and TradingView account, I would suggest you do so, as I post up my everyday charts there, day-to-day things I'm doing, and so forth. Alright, without further ado, let's get right into it. Trends. Alright, trends. What is a trend? A trend is an uptrend or a downtrend. Simply stated, the moving of price over a certain amount of time, whether it be a trend of 15-minute candles that end up turning into a trend of hourly candles or 4-hour candles, or daily or weekly trends. It's the continuation of price action and movement in a coin. So a trend would look something like this, where you have, get that guy off, where you have a continuation of a move, right? So that's a downtrend. An uptrend would be something like this would be an uptrend. This would be kind of an elongated uptrend, and it's all fractal to each other, right? So you have information within different time frames that are giving you different information. So uptrends and downtrends are simply just that, the continuation of price movement in a move. So this lesson is going to focus on one of the most important things in the trading space, which is trends. There's kind of this time-old saying, the trend is your friend, and that's been a saying that's been used for a very long time by many of great traders. So the trend is your friend is it couldn't be more true. It is probably one of the most accurate sayings in markets. And why is it true? Okay. Let's look at something for a second. If something is in a trend, whether it's in a downtrend, an uptrend, right? If this has started, what are we on, a 4-hour chart? If this has started right here, an uptrend, right? You are going to have an uptrend continue until there is a reason for that trend to break down and fail. So if you were to buy somewhere here, albeit it's late entry, if you're still in an uptrend, it's good entry, because until you have a reason to break that uptrend, or until that uptrend is tested and broken, it's going to keep moving up, right? It's like all stocks on all time frames. If you look at it, outside of areas like this where you have accumulation and distribution, the only other thing that can happen is trends, right? So you have accumulation or distribution, which ends up being buy or sell zones, and then you have the move up or down, right? Which is a trend, up or down. So if you remember back to the beginning videos, the beginner series, we talked about accumulation, and what are the steps in accumulation? It's accumulation, distribution, and a move up or a move down, right? So really it's the move up and the move down that you now start to dissect, right? People understand accumulation, and accumulation becomes justifying levels of support and resistance, and these different things where we can say, okay, we have a reason to buy something because event X happened. So because of event X, which would be support or resistance of some type, we think that we are going to move up, because if we just hit event X, we have entered accumulation, and after accumulation happens, you have a trend. So really going back to the beginner series video, you have accumulation and distribution followed by trends, right? Accumulation, let's clean that up a bit. You have accumulation, trend, distribution, trend, accumulation, trend, distribution, distribution, trend, accumulation, trend, distribution, trend, accumulation, trend, distribution, trend, and so forth. Well, so forth as in one more. I think I killed that to death there with the accumulation distribution. But you can really see now, when you start to dissect even the most basic concept of accumulation and distribution, it becomes accumulation trend, right? It's the breaking down of what happens after accumulation, because if you want to think about it as take the entirety of the course contents that we've learned thus far, and if you haven't watched the other courses, if you haven't watched the other videos, you at this point you have to, in order to understand this. I would highly suggest you do so. Check it out and try to see why I'm saying what I'm saying. So highly important that you watch everything up until this video, just as they are all catalysts to each other, just like every video that I do. So now if you go back and break down the most basic lesson, which is accumulation and distribution, and you start thinking in terms of, well, this is a theory, but it's very advanced because it's very in depth. Accumulation ends up becoming everything that we learn about levels, everything that we end up doing on a chart, saying, okay, this is a level here, and this is a level here, and then you have a level here, and then you have, you know, a level here, something like that. So all of that stuff we do with levels, all of the charting we do ends up justifying the accumulation, right? It ends up being the justifying factor for whether to accumulate or distribute a coin, down to everything we do in a move, right? We have identified this level here, therefore we identified distribution there, right? So everything we do becomes identifying accumulation and distribution. Well, what is the other part of that when you break it down? So drawing all your levels of support and resistance, everything that we put on a chart is, you know, can go back to the basics of accumulation and distribution. And in this video, we're going to dissect the trend, right, which is accumulation, and I called it move up in the past, or accumulation move up, distribution move down. Really take out the word move up and move down and replace that now with trend. As awkward as it may be, it's what we do, right? And you know, there's other stuff that goes on in the charts, like, you know, trends like this and that, and those are different types of trends. We're talking about uptrends and downtrends, not a trend line. We're not talking about something like this where you have a trend line, or something like this where you have a wedge, right? We're not talking about something like that, which I guess would be more so like that in this scenario, or even quite like that. I'm not sure. I haven't charted this coin too much. We're looking at Bitcoin Diamond, by the way, today, for the reason that it took a move up last night. We might switch between a few coins to dissect this information, but anyways, replace that word move up and move down with trend, because now we are going to look at things as in terms of uptrends and downtrends. Okay, so trend is your friend, right? This is a time-old saying, and you guys are going to understand. I want you to keep that trend is your friend saying in your mind for this video, and you'll see why I say that. So let's start talking about what's called laddering. Laddering is probably one of the I say this with a lot of I say this with a lot of things. It's one of the most important things you'll ever learn, but really it all becomes equally important, and with no exception to laddering, because laddering becomes one of the most vital pieces to segment yourself into making profitable trades on a consistent basis. So I guess instead of saying it's one of the most important things, I'll identify why it's important. So it is important because it is going to let you, when you are trading any stock, whether it's NASDAQ, whether it's index futures, whether it's bonds, Forex, crypto, it doesn't matter, being able to understand a trend and dissect what it's doing will give you the minute-to-minute play-by-play of what it's doing. So when you understand how to dissect a trend, you will be able to say, okay, this thing is about to move up. I should buy because I know it's going to move up because of X. You can draw levels all you want. You can draw support and resistance and buy zones and accumulation zones. But unless the trend forms and unless the trend starts to come to fruition, it won't matter, because maybe you misidentified accumulation because a trend failed. So really, understanding trends becomes the most important tool when it comes to making money. I guess that's the best way to put it. And I hate saying those words, but it really becomes quite true. It is the most important tool when it comes to protecting your investments and making money and all that. So what is laddering? I've kind of touched on this in a previous video, but this video, due to the importance of it, we're going to talk about it in great depth. So laddering is something where you have a level of support or resistance. Let's just switch back to the charts. So laddering is something where you have a level of support and resistance, and you start with a level here and it gets touched, right? And maybe you see that as an accumulation zone, so you buy. And laddering is when you constantly make a higher swing low, right? It's that saying of, wow, we're making higher lows and higher highs. Well, really that is true to one sense, but really the point of it is it's called laddering. When a move starts to ladder, you will see a trend form, right? So if you were to go to, you know what, we'll start on the 4-hour chart on this one. If you were to go to a 4-hour chart or any chart really, and you start to see something like this, so you identify an accumulation zone, which is something like this, you will start to see trends form. Now, trends are going to be 2 candlesticks or more, right? So let's use the replayer tool. Let's cut this off right here, and let's go through an example of laddering step by step. So you have a swing low created here. You go forward in the move, right? You get buy confirmation on the bounce, right? First touch rejection, buy confirmation. You have now created an uptrend, right? And before you created that uptrend, you actually created a downtrend right there. Those 2 candles right there. You actually created a downtrend in order to get to where you were. So if you were to start by marking out that level, and for this video, I'm going to do yellow for downtrends and green for uptrends. That's how we're going to do it, right? So you can see that you create actually another downtrend in here as well. And oops, we don't want both of them, we just want one. And really this becomes a parody to valleys and peaks, right? Because all valleys and peaks are, right, is trends as well. So, you know, we talked about this in a previous video about valleys and peaks. Again, if you haven't seen it, you'll need to know it to understand it, right? Peaks and valleys within peaks and valleys. But really the important part about this is the trend, right? You can see you start an uptrend here, right? And now what you're looking for, not only do you have to start testing these valleys and start closing out these targets, and all that stuff we talked about in the past is still true, but now you are looking to dissect the trend. Now you are looking to dissect this move down to the minute, so that when you're trading this thing, you don't take a position at X and then end up losing money because you couldn't understand the trend, right? It's all about understanding what the coin is doing in the moment, or the stock is doing in the moment, and being able to dissect that. So before we go forward, if this is going to continue moving up, now this becomes a part of the trend, right? We already understand the valley like this. We already understand its importance, and we already understand what we have to test and this and that. If it is going to continue to move up, it has to continue to make higher uptrends. So the start of this trend is right, good old magnet tool, never a video without you. The start of the uptrend is here. It cannot start back testing and breaking this uptrend. It has to make higher uptrends to continuously move up, right? And then it would be the same thing on a downtrend. And you can see it here, right? On a downtrend, this has to constantly make lower highs in order to keep moving down. So right here, you have a downtrend. This would have to come up and above it to break and back test that trend, right? So you make one downtrend here. This comes, ladders down, you make another downtrend here. This comes, ladders down, you make another downtrend here. Comes, this ladders down, you make another downtrend here. This comes, this ladders down, and you make a downtrend here, right? Just like you made an uptrend here, right? You have to make higher uptrends, and those uptrends have to continue to be higher than the previous uptrend in order for the move to keep going. So, and even where we are in the move right now, I'm going to break this back down to one move past, because this is already started, right? This move has already happened. So we make an uptrend here, we make a higher uptrend here, right? So, oh, whoops. We have one uptrend here. We make another one here. At the point where this uptrend starts to back test and break, you can see the move failing. So that's exactly what happens here. We make an uptrend here, we come back, we make a higher uptrend here, we start to go higher in the move, and it comes and it back tests the start of this trend, right? So it's the same thing as a valley, right? Or this one would be a peak, sorry, but it's the same thing as a peak, right? So how I taught you guys to identify valleys and peaks. Now you can see how the valleys and peaks will play out in the moment. So in order for this to move to keep going up, you have to continuously make higher uptrends. So that's what laddering is. So if we take those away there we go, and get back to this move and use our replayer tool, No, we already have it up. You will notice that we have to continue making higher uptrends, right? So here's the uptrend right here. So there's an uptrend right there, right? So this move has to continuously ladder up in order for it to keep going, right? And you see you make a higher uptrend there, right? Oops. Got to get a little more proficient with that copy paste tool. And see you make a higher uptrend here. This is called laddering. You make a higher uptrend here, right? This would be fractal information. This is one complete uptrend. This is the 4 hour. That would be this would be fractal. So there would be more uptrends and whatnot within the hourly and 15-minute chart and all that. So you would have more information there. Oh, and there you make another uptrend there. Right? So you see how this move is constantly laddering up. It's constantly doing this thing where it starts an uptrend, it comes, it creates a higher uptrend, it creates a higher uptrend, a higher uptrend, a higher uptrend. So it's constantly creating higher uptrends. It's never coming and back testing these trends, because when it starts to back test the trend, it is starting to tell you the move is either going to do one of two things. Okay, it's either going to back test it as a first touch bounce rejection, right? So it's either going to come, it's either going to do this. It's either going to come up and back test it for a first touch bounce rejection to look to start laddering up again, because it has to continue to ladder up, or it's going to back test it and start to fail and break down that level, right? As long as a move is laddering, it's going to continue moving up. But when you start back testing the trends you create, you will lose the move. And there's the next one, right? So here's the next laddering, and it's already starting to back test this. And you can see the loss of momentum there. It's actually back tested this trend here before it could make a new move up, right? So this move is looking like it's already starting to fail. And right there, so it does back test and break that trend. And you know, when this kind of thing happens where you come back and you back test the trend, you're back testing it to break it, unless you have some insane spike up. You actually don't even reach the level here. So you know, the swing high here, you actually don't even reach it. So that was pretty clear indication that the move was failing. So now when this trend fails, it is now fractal to the other information. This is a 4 hour chart, right? And we're going to go and break down a 15-minute chart so that you guys can see how this looks fractally after this here. And you're going to see the back testing of the next trend, which is right there. So this trend start actually back tests, right? So now you are looking to back test the trends that you've created, right? And whatever trend was here, this would have been like this, and that's what you're back testing here. You're back testing to see if you can hold the value you closed out. Let's just go through this quicker. So you are trying to test that value that you closed out back there, and it fails right there. So at this point, you would expect, you know, a new downtrend to start and a new swing low. The second you lose this valley here that you gained, right? This was a pretty important. This was a pretty important downtrend to gain. This was a pretty important valley to close out. But you know, you can see here how it tries to hold, and ultimately when it loses it, it just completely breaks down and falls through the floor. Let's remove all drawing tools here. Get this a little cleaner. So it completely, you know, falls through the floor, and then has some other level that it's holding, maybe here, or that was the start of an uptrend here, or possibly at the very lowest right there. Let's see what happens here. So it does. It looks like it's holding this uptrend here. And now this is something interesting that happens. You notice it's holding this uptrend, right? It's holding this uptrend. It actually never back tests this. So technically this move is still laddering. Technically this move fractally is still laddering, even though this part of the move, we'll use the triangle tool. Even though this part of the move failed, we still have a laddering that's happening off of this trend right here. So we actually still have a trend that's still laddering. So everything is fractal information, right? Everything is time zones within time zones. Everything is trends within trends. Everything is fractal to each other in stocks. Everything is one point of entry or one event that's relevant to another. So you can see that this is actually still laddering up. This actually isn't losing the long-term downtrend. It has lost a local move right here, and it has failed this valley that was created here. So it did fail that valley that was created there, but it's actually never back testing this trend. So it's actually laddering and holding. So if Bitcoin Diamond continues to move up, you can expect it to move up past this mark here, because this could be a ladder like this, right? Makes a new ladder here, which then becomes like that, right? Something like that. Now that's not exact. It's not going to go spike up, spike down. But the point being is that this rounding pattern here, right? This rounding of this here could possibly just be the laddering of this here, where you are going and doing something like that, which would be the laddering of something else, right? So trends are how you identify and see the tops and bottoms of moves. And when you start closing out valleys and trends and you start laddering up, right? That's, what better way to show you than on Bitcoin, I think. Let's just go to Tether. USDT, is that what it is? BTC, I thought it was, that's why I have too many T's. USDT, there we go, Tether. So I'm going to show you guys something, a laddering that's been happening on Bitcoin, right? People have been asking me, well, what's going on with Bitcoin right now? Well, for the first time on a daily chart, Bitcoin has closed out its daily downtrend, right? There's a downtrend that starts there. There's one that starts here. There's no downtrend in here, although there would be fractal in the 4-hour charts. There's never a daily downtrend. You have a downtrend here. You have a downtrend here. You have a downtrend here. And you have another one right here. So if you actually look at downtrends and another one here, is this actually a downtrend here? Technically it is, yeah. I really should have Mr. Magnet on, but I don't. And then you have a downtrend right here, right? So if you actually look at the last time Bitcoin closed the daily downtrend was right here, back in August. It closed it and then failed slightly afterwards. So that was actually the only downtrend that's been closed in Bitcoin on a daily chart for a long time. I guess you could call this a downtrend, but not really, not fractal to the weekly. So when Bitcoin closed out this downtrend right here, it is the first time from the drop to 6K, it has closed out a daily downtrend, right? So, when this happened, this was obviously going to ladder up and continue to traverse up to test the next downtrend, right? Which actually, that's wrong. There's another one in here. I missed one. Which it actually did test. So, and there's actually even another one in here, right there. So when Bitcoin closed out this right here, when it closed out that valley, let's delete this red mark, it was going to back test the next trend and up and up and up and up. And the thing is the exact same thing is happening, right? Bitcoin is laddering off of that close. So if you guys want to see it on something like Bitcoin, you can see it right here where, let's mark out these levels as yellow because we're on the hourly, right? Start an uptrend here. Start another one here. Start another one here. Start another one here. And what I want you to look at is how this is never back testing, right? This is constantly laddering up. Start another one here. Start another one here. And when you start to backtest these trends is when you could potentially lose the move, right? You start one here. This back trend is the first back trend that gets tested. That makes it a new high right here. This is one right here. This is one right here, and so forth. So you can see that actually this idea of laddering a move or laddering within a trend, you can see how clear it becomes and how obvious it becomes in a move to see exactly what's going on. And this is nice for setting up the move, and this is great for when you're looking at the move. But it will also show you the failure of a move, and we will get into that after. But you can see here, you're not losing any trends. So this is the key takeaway, is that you are not doing price action that happens like this. You come through, you break down to a level, you hang out in this area, and then you move up and you create something new and come and break down and hang out in here. You're not doing that, because if you are backtesting trends, right, if you start to backtest trends, that's when you are backtesting the failure of a move. Or, you know, I hate to say this word because it is commonly misunderstood, but I will in this example. When you backtest a trend and close it, that's a signal of reversal, right? Now, this isn't you close a trend, right? You've back closed and tested a trend, and all of a sudden you're in reversal, right? Nobody can ever know the full effects of reversal, right? These things play out by the minute. There is no one indication that you can sit here and say, well, I called the bottom, this is reversal, right? You can't say that, because this stuff happens and the work has to be done. All the work that was done to create the move has to be undone, right? You have to close out this back downtrend. You have to close out this downtrend. Then we'll have to close out this downtrend here. So next target would be this level here. And then and it's all fractal too, right? Look, we have a weekly downtrend that was started, right? So we have a weekly downtrend. So what's going to happen if we close out this weekly downtrend on Bitcoin right here, right? What happens if Sunday rolls around and we are closing out higher than, I guess I'll use the magnet tool for this one because this is exact. We close out higher than 41.79 on the weekly chart. It might take another week to get there, right? Because this could simply be good old magnet tool. This could simply be first touch rejection, bounce, ladder up by creating a new, right? We could come down here in some level on the daily charts, we could come down here somewhere, but on a weekly chart, we're still fractally laddering up, right? Just like it did here, right? Look, right here, it does the same thing. It does the same thing here, right? On a weekly chart, it's all fractal information. We create an uptrend here, we come up, I'm sure we broke a bunch of dailies or whatever in here, but we are still laddering up, right? We're still laddering the move up. We are still making higher uptrends, and you see it right here, right? You have an uptrend that starts here, and you ladder up here, right? I'll point at it instead. So you have two candles there, and then you have two candles there, right? So you're constantly laddering the move, right? It's the same thing. So, you know, this was pretty obvious on Bitcoin. When you want to talk about finding a bottom and seeing reversal, this is the first step, right? This is not saying that this is confirmed reversal, but when you start closing out these kind of downtrends like this, right? When you start closing out these kinds of downtrends, well, that's what it needs to do. It needs to undo the work that it did in the past, right? It needs to undo the work and ladder past these downtrends, which are really just valleys and peaks, which valleys and peaks are compounded levels of support and resistance. Instead of one candle, you have stronger levels, and stronger levels create valleys and peaks are downtrends. And closing out these downtrends or valleys and peaks also shows you what's happening in a move. So to kind of give you a long-winded explanation here, it's a pretty important concept to understand about closing out downtrends, and then the same thing with uptrends, right? We're looking at closing out downtrends here, but now we're also looking at closing out uptrends, right? So you create an uptrend here, right? You create this uptrend here. You have to continuously ladder up, and when you close it, when you close it down, you have to make a new lower uptrend to start that move again. So you make a new lower uptrend here, and now you need to start laddering up, right? So we broke down Bitcoin to the hourly. This stuff can even be broken down to the 15-minute charts. And sure, we'll do one for Bitcoin. Whoops. We'll do one for Bitcoin, and then we're going to do Bitcoin Diamond as well, because that's been a fun one for the past day. I just like to chart coins that are typically, you know, have made a move. And I was also in Bitcoin Diamond, so it's fun to also, for those of you who you know, follow my moves. I was in Bitcoin Diamond, and I said, well, it's a good buy here and this and that. So now you get a chance to really look at that move and say, oh, that's why he did some of the things he did. So I'll just start here because it's smack dab in the middle of our screen. And colors are not relevant in this video. I'm just using this to illustrate something. So you have a 15-minute uptrend here, right? It ladders up. Come on. Ladders up to here, right? The 15-minute ladders to here. This 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 15-minute ladders to here. And at that point, we start to lose our trend, right? And we've actually lost it a few times here. So let's talk about this part of the move. We have a level here, and I don't want to go any further than that because I just want to know that these last two levels here are roughly a new ladder, and then also something that was lost, because when you start losing this, like I said, you're gonna lose this uptrend here, right? This peak right here, like this. When you start to lose that right there, right? When you start to lose this, the beginning of the uptrend, which happens over here, you are going to go and back test the other trend starts, which you ultimately test this, right? But now, this is great on a 15-minute, but what happened on the hourly? Let's take a look. Did we ever actually lose an hourly trend, right? Let's mark some hourlies as a different color. Let's go blue for the hourlies here. We have the start of an uptrend here. We have, we have the start of one here. We have the start of one here, same spot. Did we ever lose an hourly? Have we ever wicked through an hourly? We never did. So it's all fractal, right? Where's the spot where we wicked through the hourly uptrend? Right here. So this was the start of a hourly uptrend right here, right? Now let's delete everything else on this chart. Let's make this nice and clean. This is the start of an hourly uptrend where we started to wick through. And even this one right here is a good example. Right here is where we wicked through. So the top trend, or sorry, the top level is where we wicked through. Did we ever lose a 4-hour trend? Let's take a look, right? Now 4-hour trends, let's mark as, oh, we'll go purple. Why not? Sure. It's just random colors, completely arbitrary. We have a 4-hour uptrend starting here, right? Oops. We have another 4-hour trend up starting here. So let's just delete this, right? Let's delete that. So we may have wicked through on an hourly, which we also lost 15-minute uptrends. We lost 15-minute uptrends. We wicked hourly uptrends, but we never actually back tested a 4-hour trend, right? So we haven't actually back tested a 4-hour trend yet. So you can kind of see how information is fractal and it's relevant to each other, and fractally how this becomes important information to glean, right? You switching between charts and you know, even if we lose a 4-hour, that's a pretty strong indication that we might be targeting, you know, a daily breakdown. But even on the daily, we haven't seen, you know, since, let's just clear this all and use red, because red has kind of been our common daily color. Come on. Right? Since closing this downtrend here, and this one here, and this one here, since closing these three, we haven't come to back test this here. And in order to come down and back test this, it would have to undo a lot of work, right? Like you would have to go and you'd have to start back testing every single trend on a 4-hour chart, on a 12-hour chart, on a 1-hour chart, on a 15-minute chart. So right now we are laddering up at a good speed with Bitcoin, and you know, we might see a little bit of movement down, right? The kind of the final target will be this right here, this 2-week weekly downtrend. So we'll, you know, we touch up there, and we're going to move down and test some daily stuff before we can break through it, right? That's kind of the idea. But everything is fractal within each other, right? All this information is fractal. It's all different time frames, different levels of support and resistance, different valleys, trends, everything's tested, and you kind of all have to use it together in the moment. So let's go look at Bitcoin Diamond. And let's look at what happened in the past day, and just take a quick peek at our at our list here. Okay, the trend is your friend, right? Now you guys can see why the trend is your friend. Never sell during an uptrend. Pretty common sense, right? You'll be able to understand when to exit a trade when you start back testing uptrends and start losing uptrends, right? When you back test an uptrend, and you can see it down to the 5 or the 3 minute chart, right? And that's how you can play scalps too. You know, being a scalp trader, you can simply just play the trends, right? So let's go break Bitcoin Diamond down into a 15-minute move. And let's actually take a look at what happened here with Bitcoin Diamond. So let's just, you know, start out by, what is this, December 18th? And what's today's date? December 21st. So over the course of 3 days, what's happening on a 15-minute chart? You have an uptrend start here. This never back tests, right? You have another, I'm probably missing a few in between, right? So you'd have one there, this back test, but then ultimately ends up laddering up, right? It ladders up to here, which again, back tests, and that's all nice. You have, right, this first one here, back tests right here and breaks down. The second one here, back tests and breaks down here. But at this point, the third, right, because it's all fractal, because what's happening on a 4-hour chart or an hourly chart, or you may be losing 15-minute moves, but are you laddering up on an hourly chart? And you notice that from that swing low here, time to put Mr. Magnet back on. You notice from that swing low, you never actually come back to back test that trend. So, you know, you actually take this big move up, and that's why, because you've laddered off of an uptrend, right? You've never actually came back down to test this uptrend. Oops. So let's look at what happens here. Bitcoin Diamond takes a rampant move up, okay? After this rampant move up, right here, right? It comes, it swings up here. We are now looking for it to start laddering up and creating new uptrends. So the first thing it's going to do is it's going to ladder down. So now we are going to mark out some laddering down levels, and this is going to be, I think we used yellow before, so we use yellow again for kind of this laddering down of a move. So you create a downtrend here, right? You have 1, 2 candles there. There you create another downtrend here, right? You have 2 candles there. At that point, you are no longer creating downtrends. You get to this area here where price starts to offset, and you are no longer creating downtrends, but you are also no longer creating an uptrend, okay? So now what I want to do is I want to break this down to the 5-minute chart, because the 5-minute chart is actually going to give us more relevant up and down trends in this move, right? So we've identified the 15-minute. Well, we actually do identify 2 uptrends here, right? So really, there's this here, and we're going to turn this green. There's one before that as well, which is right here. So this ladders down, right? This creates an uptrend, which actually doesn't complete on the 15-minute. So on a 5-minute chart, yes, that's a downtrend right there, or sorry, that's an uptrend right there. But on the 15-minute chart, you don't really have any confirmation that that is an uptrend, right? You don't see anything there. So actually there is no uptrend there, right? So you can see how information starts to become fractally relevant, because on the 15-minute, you also saw the start of an uptrend here. And I guess that would be even more fractal information, which we can break down. Where's the start of this uptrend? Well, technically, there was the start of the very first uptrend happened here, which was actually also on a 15-minute, which was across all 3 time frames. So you never actually lose this uptrend here, right? You never actually lost this uptrend. You came down and you tested it, but then you started to ladder up again. So let's see how this move plays out now, right? Now I'm going to delete all this stuff here. I'm going to delete all the information we have and start fresh, because we have our uptrend right here, right? We know that's right there. Let's get that magnet tool back on. And then we have a new uptrend right here, right? Oops. Between the magnet and the new one is the copy and paste tool, right? You see how we are never losing these uptrends, right? And you are laddering higher and higher and higher throughout the move, right? You are laddering higher and higher and higher throughout this move the whole entire time, right? You have an uptrend here. You've never lost that uptrend. You've tested it, but you're actually also laddering up, right? You're laddering up one sat at a time, right? You're laddering up from here. You've laddered up to here, right? So, magnet tool. So you have again, Jesus, Merry Christmas, Holy Hannah. So you have this uptrend here, you ladder up here, you hold, you ladder up here, you hold, you ladder up here, you hold, you ladder up here, and then you take a big move up. So that's what happens when you constantly ladder these moves, you take big moves up, right? And then you start to back test to break these trends. And if we were to mark this high here at 285, when we start backtesting these trends, we are probably not going to reach that area again. So we've actually now created a downtrend that we have to break. So inversely, now instead of laddering up, we have now switched this move to it needs to break a downtrend. And let's put that as yellow for this example, right? So now you have a downtrend that's laddering your price down. So the same thing that you had when you laddered up, you are also laddering down, right? You have another downtrend here, and you constantly ladder down. And this may have broken on a 3-minute chart, right? Remember, we're on a 3-minute chart here. Oh, this actually did break through, but it actually wasn't able to break through this here. So fractally, we created a larger, let's remove all these drawing tools. Fractally, we created a larger downtrend here, and we have not been able to ladder up past it yet. So it's the polarity of the move, switching from uptrends to downtrends, time frames within time frames, right? You have a downtrend there, you have one here, right? What does it look like on the hourly? Well, on the hourly, we've got one right here, and we've actually never laddered past it on the hourly. So until we start to form another uptrend, right? Until we start to hold above this level. If we are holding up here, it'll take a huge move up. If it starts holding above, whoa, geez, what happened there? If it starts holding above this level here, right, that we had marked out, if it starts holding above that downtrend, it's going to take a huge ladder up. And that's the way it works, is trends within trends, time zones within time zones, right? So let's go back to the 5-minute chart, right? You've got a downtrend here, you've got one right here, and that's what was tested. So this level is actually not a level. That was a testing of this trend here, right? And then you've got another downtrend. Well, what's the next downtrend? You've got one right here. No, you actually don't. It's right here. That's where the downtrend is. So 1, 2 candles. So you've got a downtrend there, and it's constantly laddering down, right? And then you've got one right here, and this one has a quick little glimpse of a breakover, but it's still laddering down, right? And so forth and so forth and so forth. So that's how, you know, the move happens. But then you also have to look at it from a larger perspective too, because you can't just see the downtrends and uptrends. You have to see the entire picture. So what's really happening? Because you've got a uptrend that started here. Now let's mark these as green. Right? You've got an uptrend that started there. You've got one that started here. You've got one that, oops. You've got one that started here, right? You've got another one that started here. So this one is lost, and I'm going to put a dotted line through the one that's lost. That one is lost, but we are still holding the larger uptrend, right? We are still holding this one. So we have downtrends within uptrends, fractal information that's fractal, and this is how you can look at a chart minute to minute to minute and say, oh, okay, it's time to buy or sell, right? Now what's happening on the 4-hour chart? This is a 5-minute chart. Let's go to the hourly. Right? We don't need that information anymore. Uptrend here. Uptrend here. So we are actually holding higher uptrends on the hourly. So maybe over the course of this day, this continues to ladder up. But if you were in this trade, the second you lost, what is this, 253, you would sell and rebuy at 248. But at that point, you might be just breaking down. The move might just be breaking down and failing because it's not laddering up anymore, right? And then right now you have a downtrend that you have to break here. So you have yellow, which is our downtrend. It is untested. This will be, you know, the most important level for it to break. So, you know, first and foremost, Bitcoin Diamond has to break 267 sats, and if it breaks 267 and holds above it, you know, then again it can target this downtrend and it can look to break that. And if it breaks that, well, then it's going to target something else. Right? What are we targeting at that point? When we then start closing over these two levels, well, this level was already tested, right? This daily level here, let's put this one big fat red line. This daily level's already been tested, right? Like this move's already been set up to break. So what's next, right? Next downtrend is here, right? So this is going to be the next level, and this is a tested level too. So this probably isn't even going to get respected. It's probably going to be something in here, fractal in here. So 323 sats, and if that one breaks, right, what's next? It's going to be something fractal in here, and so forth, you know, ultimately until it reaches whatever target it reaches. So that's how you dissect trends and in the moment. And I guess one thing we can do is look at how I would have played this position here, moment by moment by moment, because I actually probably completed about 10 scalps on this trade. We'll just start from here. So watching something like a 3-minute chart, I was actually in this much earlier. I was in it from about here. I was, you know, after this took a big move up, you know, you kind of wait for some confirmation to enter a position on a coin. And you would have had an uptrend here. So I would have looked for this to hold right here, this uptrend here, this 3-minute uptrend. I would have looked for this to hold, and I think I took my first trade right there. Yeah, my first trade was right here. So when this uptrend here is holding, let's put this then again, and let's make this one green. When this uptrend is holding, I am entering to look to target something else in this coin. So potentially right here, 266 sats, enter at 260, right? So 260 would have been, or 266 right here would have been my first exit, because I'm just looking to target some previous levels. Then I will look for this to retrace a bit and come back down, which it does right there. And this is where it starts laddering up. So I would have taken entry right here. When this level doesn't break down and it creates a new uptrend, I would have taken entry there to target 274 sats or something lower, probably 268 at this point, another 6 sats. And I would have got stopped out there. And then re-entered right here, right? Or at least looked for confirmation for this to start holding, right? Let's get rid of some of those levels. And as this move is forming, when I start to see things like this happen, when I start to see I've entered here, right, with an exit target of 274. When I see this move starting to collapse, I am exiting out right on my entry, because if that's collapsing, you know, it's just going to ladder down. So it's actually, you know, a situation where you're not technically losing anything, because you've entered at, say, 262 sats and you're exiting at 262 sats, because you're just looking for the uptrend to hold, right? So here's the next situation. You've got an uptrend that started here, right? So you're entering on that next uptrend ladder. So entering right here at 257 sats, and let's start to just move these. So entry at 257 with a target of 264, for example, which it completes. It does actually exit at 264. So that's another, what is that? Another 7 sats. So we had plus 13. And this is roughly how my trade played out. And it never actually breaks this uptrend. So now I'm looking for it to hold something above this uptrend. So now I would look for it to hold a level here and not test this. No, it tests it, so there's no entry there. So now this is gone, and this is looking to ladder off of that. So here's entry here at 257 sats. I'm going to speed this up, and target would have been somewhere in here. Just going to speed this up for people. So I would have made more there, and then it back tests the trend there, breaks down, so there's no entry there. You have to wait because this fails down now. So we've got roughly 20 sats of profit, or something. Let's just call it 13. I didn't, you know, I know I took a few in here. Now we're making new downtrends, so we need to start seeing where the next uptrend is before we re-enter a position here. So it's right there. So this is the start of an uptrend. So 247 sats. So we took entry around 251 with a target of something in that 260 region. So another 10 sats there. And it ladders down. And we would have got stopped out on our position there again because the trend it fails, right? The trend collapses, right? So here's the start of the next trend, right? Now this is where it's laddering. So this is 100% obvious entry. This was you know, 251 enter again for a second time. This is 100% obvious entry, and it does target our exit of 264, something in this downtrend region start. So here you can see the move laddering. So now when this holds again and ladders up, right? See what happens. Tests it there. Does it make a new uptrend? No, it's still just holding. Still holding. We're just going to speed this up a bit because otherwise this is going to take. And right there is the start of the next uptrend. So 251 would have been entry again to target something in this region here, 265. Come on. And right in around there, it would have been a sellout position at 263 or so. And then it starts laddering again. So back in at 257, right? Out at 265. So you can see how the trend, you know, breaking this thing down minute to minute, you can see how laddering can be used in the moment to see what a move is doing. You can see how it can be used as your as you're scalping, because every 2 sats in Bitcoin Diamond at you know, the price of 255. So 5 sats is 2%. So 1% would be 2.5 sats. So I just, you know, easy math, round up. Every 2 sats is roughly 1%. You call it 3 if you want to include fees. So every three sats is 1%, or whatever, however you want to break it down. Just quick math in your head. You can see how making 40 sats on swing trades on something like that can easily be a 20% profit, because you saw the laddering of a coin, and you know, on a 3-minute chart, on a 5-minute chart, and you have to decide which chart you're using. I have my charts that I use. You know, even on the 15-minute, you know, where's something laddering? Even if you're playing a 15-minute chart, it's laddering here, right? It's laddering here. So you could see that you could have taken a move up, short of the top, come down, taken a move up, short of the top, come down, and down to here. This would have been, right, the failure of the 15-minute, but then you regained the 15, bounced off the 15, and took a huge move up. So again, it becomes entries and exits. It becomes fractal information, time zones within time zones, moves within moves, combining it all together for this great soup of trading perfection, I guess is the best way to put it, because it's also, you have to take the other theories like entries and exits, right? Like we talked about in the past, how on this 15-minute chart here, let's mark out these levels real quick. I'll give you guys one more little thing here. Right, there's the start of an uptrend there. Come on. There's a start of one there. So in one of the previous videos in entries and exits, we talked about a type of entry where it comes up, creates a new level, right? It bounces past the level and comes up, and it'll first touch bounce off of it again, right? So that was a type of entry where a level is created, right? And you come up and you create a new level here, and then you come below it and back above it and start closing back above it. Entry at that point is when you come, touch it here, and first touch bounce rejection, because you're going to take a big swing move up, because it's just another form of laddering, right? It's just laddering on a larger time frame. So this is just laddered on a larger time frame, fractal information within fractal on the hourly, right? So what does the hourly look like on here? Well, you have the start of an uptrend here, right? And before this big move up, you have the start of your next uptrend. So on the 15-minute chart, we saw the breaking down of one level, but then when we switch it over to the hourly, we see the laddering of the hourly level, instead of the breaking down of a 15 to have confirmation entry. So that entry confirmation that we talk about on a 15-minute level, it exists. On an hourly level, we're still laddering, right? So it's all information within information, things you have to use, and it gets quite complex. And, you know, putting it all together takes a long time practicing and a lot of trading over the course of months and years. And it's not something that you can easily see, because it becomes this very deep set set of theories that you need to mix together on different time frames. So what is a 3-minute time frame doing for a 5-minute time frame, and how is that affecting the 15-minute and the hourly? So it becomes this this hunt for data, right? It becomes this mining for data kind of thing. So hopefully that clears up trends for you guys, and you guys can see trends a little clearer. And I guess the last thing we're going to talk about is the collapse, and I think we pretty much already went over everything that we need to, but the collapse of a trend, right? It's going to be the same thing, and we basically did talk about this, but you know, where does a trend collapse? What happens on trend collapsing? Trend collapsing happens when you start to lose those the laddering, right? Like, so if we were going to lose this level and we are going to close out on the hourly, we're going to come back and test this. So that's when it's starting to collapse, right? And that can be seen all the way up to a 5-minute level. That can be seen all the way back up to here when we looked at these levels here and we saw the start of a downtrend here. And it's just like an uptrend. Let's clear the chart. It's just like an uptrend, right? You have a downtrend that starts here. You have to a downtrend is also going to do that same laddering. It's going to continuously ladder down until it hits an uptrend, and then it's going to start to ladder back up and try to break this valley that's created, right? This valley or this peak or whatever this ends up being, right? So it's laddering and trends within ladders and other trends, right? Accumulation and distribution within trends. It's just fractal within fractal within fractal, like everything, right? So you have a downtrend that starts here, right? You have another one that starts here. These two never close out, right? On a micro scale, you do have one that closes out here, right? And then you have another one that closes out here, but those are only relevant to the time frame they're in, right? It happens when we switch to the 15-minute. Well, we have a downtrend that's never closed here, and a second one on the 5-minute that's never closed here. So we have a 15 and a 5. Those are never closed, right? So this is what the collapse of a trend looks like. You have another one that's created here. You have another one that's created here. And so these 15-minute candles, right? Like these 15-minute level collapses are now starting to target those hourly uptrends. That's what a collapse looks like. And you can see how the move is now starting to break down. Come on, there we go. So you have the uptrend on one side, which is going to be green, and let's change these 3 to yellow, just for clarity purposes. 1, 2, 3, 4, ABC. Geez, fun. This is why you do it properly from the start. So, right, you have the creating of an uptrend, and now you can see that uptrend starting to collapse, because inside that uptrend, downtrends are starting to be formed inside of an uptrend, and those downtrends are not stepping up anymore. So now we are actually laddering down in a 15-minute chart to target the hourlies. And if you look at this, this was already tested. This level was already tested here. This level is going to break. It's already tested. And when we know this is an already tested level, when we start to see this laddering down here, it's time to pull out, right? If you're still in the position and you start laddering and you have a tested level of the past, right? This becomes a tested level. You're most likely going to break through. And you know, good re-entry would be right on this level down here, 248, right? But with that same thing said, technically you have to hold 249, because technically you have to ladder up if you're going to continue this move. So if this touches 248, it's probably touching 248 to break. If it stops somewhere around 250 and starts to ladder back up, well, your entry is going to be where it stops to ladder down, right? So, but again, it's only information you can see once you start breaking these charts down to the minute. And that's something I want to stress on people. Now that you guys have a better understanding of laddering, when people start to say something like, oh, Bitcoin is in reversal, no one could ever possibly know where reversal is happening, because our charts are evolving by the day, by the minute, by the hour. Moves in Bitcoin, moves in any stock are happening down to the T. You cannot have one signal and say, this is reversal, or you can't say, I think that Bitcoin's bottom was 3,200 because that's a big psychological level or something. doesn't work like that. There's work that has to be done and undone. Downtrends that are created on everything down to the 5 and the 3 minute charts, all the way up to the daily and weekly charts. The only thing you can do is watch the moves evolve and chart them in the moment to see what's going to happen in the future, right? The only thing you can do is say, and you know, for those of you who have been around, when I, you know, this happened here and I said we're going to take a, you know, sizable move up in Bitcoin, and this would be the first step of what reversal looks like. I not even me, I can't even say, oh, Bitcoin just hit reversal. No, what I'm looking at right now is I'm looking at this weekly downtrend, this 2-week candle downtrend, and if we close here, that's really good news, and we're going to target up here somewhere, up in this $6,000 region, or maybe the swing low of another candle, right? I'd have to break down the charts even further and look. So 5,700 would be our minimum target, right? Or, you know, target up here somewhere. So if we start to close out this, right, we're going to have other targets in there. We're going to have other daily targets. We're going to have other downtrends that we target, 4 hours, 12 hours, this, that, etc. But nobody can say, right, oh, we just saw the bottom. Somebody can guess, and they may be right, and then they may look good, but they don't know, because you have to dissect trends and uptrends and laddering and things like that, right? You have to sit here and say, okay, this is holding, okay, this is holding, okay, this is holding, okay, this is holding, okay. But the second we start losing one of these uptrends, like an hourly, we may test a 4-hour trend, and if we continuously retest that 4-hour trend, we continuously ladder down into a 4-hour trend, we're going to say, oh, we just lost a 4-hour, we're going to now target a daily trend, right? And so forth and so forth. So, you know, hopefully you guys understand where I'm going with this, and to see what, you know, trend tests look like. So quickly recap everything here. Trends, this is one of the most valuable things of being a day trader, is understanding trends. If you're doing it for a living, understanding trends is basically how you can, how you make your living at trading. All these other things that lead up to trends are all just as important, but trends are really how you can sit there and protect your account. So if there was account protection services, it would be understanding trends. So if you were to hire somebody to say, protect my account, you'd want them to dissect trends like down to the T, and that, because that will give you your entries, that will give you your exits, that will tell you when a move is failing, when a move is succeeding. That'll say, oh, look, this move is succeeding, it's laddering up. And you know what, here's a position I took overnight. I'll show you exactly a position that I took and why. I entered ZIL, and I'll show you guys quickly how I made a decision on a coin that I was going to enter. So, and this was a very simple decision. This took me only a few minutes to see this, because it's just at that point, I'm at that point. So I looked at the daily chart. I said, oh, we have a ladder here, and we are now copy paste tool, magnet tool 2.0. We're laddering here. And then when we had this right here, where we stopped this bleeding, you know, breaking this down fractally, where we stopped this bleeding, this was clear entry on ZIL for a nice target, and I entered at 4.15, and I have already stopped out of the position since, because it hit my target. But overnight, when we started laddering in here, this laddering motion, when we're laddering up, and we were taking moves up and creating new higher lows right here, right? And then we created a new higher low here. This is where I took position, and then I sold up in here at the 460 mark on this 460, 465, I think it was. It was somewhere in the 460 range. I don't quite remember, but you know, if you look at this chart on a daily, it's constantly laddering up, right? Just remove these real quick again and just draw this out one more time. Exactly. You've got a ladder here. You've got a ladder here. You've got a ladder here, and then you started a ladder here. So, you know, every time you start one of these ladders, it's the starting of an uptrend, right? Or if you were in this coin since back here and you never actually exited, you're still in an uptrend, right? So fractal information, fractal within fractal, and you know, just understanding laddering and how it works is monumentally important, and takes a long time and a lot of practice to really get it right. But like I said, laddering will be one of the most important things you can learn on the professional side of being a trader. So when you're going, and this starts to segment into the next course too, which is you know, the fourth course, trading as a professional or whatever. I end up calling it day trading as a career, or the professional trader, or whatever. I have a 5th course, which I'm not planning to release for quite some time, at least a year, if ever. Like I've always said that, if ever. But I did add another course in between that final course that I've identified the need for, the future of trading, as I've called it in the past. But there's a course before that, which would be the professional, like trading as a profession, or professional trader, or day trading for a living, or whatever you want to call it. This would be now the segue into that course, because this will show you how to protect your account. Understanding trends will not, it'll show you protecting your balances. It'll show you where to enter coins, where to exit coins. So basically taking a theory that's built off of many theories prior to it. It's built off everything from lesson 1, right? This stuff is all built from lesson 1 all the way to the end. Everything from accumulation and distribution in lesson 1 all the way up to now trends, as to where we are saying, okay, here's accumulation. And instead of move up, move down, it's accumulation, trend, distribution, trend, accumulation, trend, distribution, trend. So now we are taking everything even from there. So you guys can see the relevance of how this stuff is taught it's taught as it's laddering. The teaching is laddering as well. There's lots of laddering in life, right? I've laddered the teaching. I've laddered accumulation and distribution to this, to that, to level adaptation, to valleys and peaks, to it's all everything is laddering off of each other. It's just the way it is. So anyways, bad jokes aside, trends is the segue into being a professional trader, because it shows you how to make money, protect your account, how to stop losing money, and where to enter and exit trades with great reason. Instead of just saying, here's a swing low, I've caught a knife, because I can understand a valley and a peak. Now I can also understand the valley and the peak and how it advances in the trend. So if you have a valley and a peak, and you've caught a falling knife because you've touched first touch, and it starts laddering up, you can now set targets. As you're laddering, you can set downtrend targets from the past, instead of just catching something, waiting for 2 weeks and then selling, or a week for the move to play out, right? You can catch a falling knife now properly and safely, right? Safely catch falling knives. Don't be crazy. Entries and exits, watch it, master it, right? Now you can take an exit and entry, and you can enter appropriately, and then you can short appropriately as well, all the way up as you're laddering. You can have a week-long trade where you've now traded a coin 30 times and turned a maybe 25% trade into a possible 80% trade, or a 50% trade into a 200% gain trade, because you've understood all of these things together, and you've used valleys with trends, with laddering, with levels of support and resistance, with accumulation. You've used it all together in this. We'll call it the soup, the trading soup. That's not a great term, but the science of trading soup. There it is. I don't know. I'm never going to use that again outside this video, because that's terrible. But anyways, I hope you guys enjoyed this lesson on trends, and yeah, we're getting close to the end of the advanced course, and it'll segue into the professional course, and that will be done on live stream. So anybody who doesn't know, there's a live stream that I'm going to be doing starting very shortly, and that's going to be the next course, and more details on that to come. Okay, guys, thanks. Take care. See you on the next one.